Hello, soldiers. Very good morning to one and all. Today, we are going to start with the main content. Uh, the 0th chapter was Fundamentals of Accounting. We completed. Then, chapter number 1, Introduction to Advanced Accounting, also we completed. Today, we are entering with the new chapter, which is chapter 2A, is 20 earnings per share. So, just for your convenience, I will open the index ones. That is, I included in the index both fundamentals as well as introduction to advanced accounting. But in the store, you can find the video lectures fundamentals as a 0 chapter and introduction to advanced accounting as chapter number 1. Now we are starting with the main content 2A is 20 earnings per share. Okay, without wasting much time, let us directly entering into the topic. Before proceeding with S20, first let me explain the structure of any accounting standard. How in generally accounting standard board drafted an accounting standard, as well as the methodology we are going to follow to discuss about the accounting standard as well. The same. So how in generally the accounting standard board drafted in the same way we are going to proceed as well. So that's why let us check things related to structure of a general accounting standard first. This is not related to AS20 structure of any accounting standard. If you're already my student with respect to group 1, then you already know the structure of an accounting standard clearly. But again, once again, as a procedural issue, I'll adopt here the structure of an accounting standard. Structure of accounting standard. So right, guys, please concentrate. Sir, any accounting standard will start with the basic objective, the reason for its existence, why this accounting standard was introduced, what it covers, which is nothing but objective. It will discuss about objective. Any accounting standard, first it will discuss about the objective. Then we will see definitions. Under definitions, what they will discuss. So standard is nothing but which are collective provisions. More technical terms it involves. So to explain in the better way, all the technical terms which are used in that particular standard were defined at the initial stage itself. So which are nothing but definitions. Then scope paragraph. Scope is nothing but applicability. There are actually at two different times we are dealing regarding the applicability factor. That is applicability of accounting standards. We already done as a part of introduction to accounting standards in group 1. That is, entities are broadly classified into corporate and as well as non-corporate. Then again, corporate, SMC, non-SMC, and non-corporate entities level 1, level 2, level 3. Right now, another level also added, which is level 4. So apart from that applicability, in a particular accounting standard, with respective to the specific applicability, we will deal. In a particular accounting standard, we will deal whether that standard is applicable to all type of entities, whether the standard is applicable in all circumstances, is there any exceptions are available. All such issues we are going to deal in the scope paragraph. And one more thing, in generally how accounting standard board built a standard in the sense of paragraphs, paragraph 1, 2, 3, 4, like that it built. But We are unable to remember all the paragraph numbers. So that's why no need to remember such all paragraphs as well. And in my classroom environment itself, I never discuss about the paragraph numbers. Okay. Then after the scope paragraph, next we are dealing with aspects of the accounting, aspects of accounting standards, aspects. You know, aspects of accounting standards. Aspects of accounting standards means it may cover measurement, it may cover recognition, it may cover presentation, as well as disclosure, as well as disclosure. Again, this topic is also we dealt in introduction to accounting. So that's why introduction to accounting in group 1 is that much of important, which is actually provide a base for the entire accounting standards. So at least the content to be set as accounting standard, it should cover at least one of the aspect, either recognition, measurement, presentation, disclosure. Some of the accounting standards may cover more than one aspect as well. Okay, so this is not a proper structure, but up to objective definition scope, we will go in the proper structure. Then according to the nature of the standard and the content of the standard, the aspects we will try to build. Okay, guys. So this is, hope you understand the basic structure of an accounting standard. Now let us move on with our accounting standard, which was AS20, which is AS20, accounting standard 20 earnings per share. Okay, so AS20 is a very lengthy standard. So much of content we are going to cover. Little bit of patience should be required at the time of listening the standard, because a lot of technicalities are involved. For a better understanding, I will visualize each and every provision, and I'll take a practical illustration as well for better understanding. Just from your side, the attention should be required. All of you, please cope up along with me. So coming here, the first and foremost thing, introduction and objective. I already told you accounting standard will start with objective. Here they are given as introduction and objective. Earnings per share is a financial ratio indicating the amount of profit or loss for the period attributable to each equity share, and AS20 gives computational methodology for determination and presentation of both basic and diluted earning per share. Now, coming here, sir, while seeing the title itself, what we can understand from the term EPS, what we can understand from the term EPS, earnings per share, earnings per share. First and foremost thing here I'm clarifying, per share means they are telling per equity share, per equity share. Each and equity share, for each and equity share, how much earnings they are contributing, or per each and every equity share, how much earnings earned. Simply earnings related to each and every equity share. The standard is simply discussing about earnings belongs to each and every equity share. For example, in the current year, you earned certain profits out of profit and loss account. Out of earnings earned from the profit and loss account, how much earnings belongs to each and every equity share will clearly discuss about AS20 earnings per share. Now the same thing here also given. Earnings per share is a financial ratio. We will discuss this later. What is this ratio? Indicating, which indicates what it indicates, amount of profit or loss for the period. In the current period, profit or loss related to, attributable to each equity share. So the same thing here I mentioned, earnings, which is nothing but earnings attributable to or related to each equity share. So the next point here we are going to discuss why it is known as financial ratio. Actually, in your financial management, there is another chapter called financial planning and analysis. There specifically we are discussing about ratio analysis. There we will discuss about ratio analysis. Sir, in ratio analysis, what you majorly discuss things related to analytical issues. Actually, this analysis is also form part of accounting. What is the definition of accounting? Accounting is an art of recording, classifying, summarizing, analyzing. The analysis part will come here. So once the financial statements are prepared with the information given in the financials, ultimately users of the financials will use the financial statements for the purpose of making analysis. With the analysis they made, they will draw on some interpretations. According to such interpretations, they will take a right decisions. Analysis is nothing but establishing relationship between two financial factors in the financial statements. Now, here earnings per share is a ratio which provides relationship between earnings, which provides relationship between earnings as well as number of equity shares. Number of equity shares. Sir, this is which type of ratio, sir? Ante, this ratio is termed as profitability ratio. Profitability ratio. In ratio analysis, so many ratios are there. That is, it is financial ratio with respect to finance, which ratios are, which is profitability ratio. Liquidity ratios are there. Long-term viability ratios are there. Profitability ratios are there. So like that in ratio analysis, in the chapter financial management, you will get a clear-cut idea. I'm not a right person to talk about all such things. The faculty, financial management faculty will discuss all such things clearly, no worries. But for the time being, you can easily understand that this ratio is a profitability ratio. Profitability ratios will discuss things related to how much contributions or how much profit belongs to equity shareholders. In equity shareholders point of view, they will discuss simply. Here also EPS also provide information related to equity shareholders. How much earnings earned by each and every equity share will clearly discussed by earning per share. That's why which was termed as a clear-cut profitability ratio. Profitability ratio is a financial ratio. So that's why they used the term financial ratio. Now, hope you understand. EPS is a financial ratio which indicating the amount of profit or loss attributable to each and every equity share. This is the first and foremost objective. Part only I discussed. And AS20 gives computational methodology. What is the objective of AS20, sir? The objective of AS20 is measurement. Computation means at which value I can measure. That is measurement. So we saw the aspects of AS20, right? One of the aspect is measurement. Now it discussed things related to computation methodology measurement. That is for determination. Determination means that is measurement only. And presentation, as well as it will discuss one more other aspect as well, which is presentation. That means AS20 is going to discuss about out of the four aspects, two aspects it will discuss. One is measurement, another one is presentation, okay, of basic and diluted EPS. So this term you not at all known. So for the time being, I will also I don't want to discuss that term also. I will also not going to discuss for the time being. Okay, I'll discuss at later point of time. Now, simply the primary objective of the EPS is determination and presentation of the EPS. That is the first and foremost objective. So the first and foremost objective is determination and a presentation of EPS EPS. I can put simply EPS. It may be basic or diluted. We don't know what exactly the meaning of basic as well as diluted. Okay, simply leave it. Second objective, the objective of this standard is to prescribe principles for determination and presentation of earnings per share, already covered in objective 1, such point, which will improve comparison of performance among different enterprises for the same period and among different accounting periods for the same enterprise. What he is telling, in the second objective, for example, you are comparing intra-firm comparison. Intra-firm means your company information for the current year you are comparing with previous year. Let us assume the current year earnings per share you got 3 rupees per share. 3 rupees per share. Sir, previous year you got 2 rupees per share. What it will tells, the performance was increased from 2 rupees to 3 rupees. Each and every equity shareholder is getting 1 rupee more in the current year by compared with previous year, which is nothing but different accounting periods for the same enterprise. As well as you can compare your EPS with another enterprise EPS. That is for example, your company name is Raj Limited. So your company name is Raj Limited, let us assume. So you are comparing your EPS with another company. Let us assume the company name is X Limited. Sir, X Limited EPS was 4 rupees per share. Now in the comparison, we can easily know that X Limited will get more earnings per share where compared with Raj Limited. Then investors will take better decision accordingly the comparison. So this comparison is only possible if you present EPS in the financial statements. Okay, that is the second most objective. And the third one, this is actually not an objective. This is form part of introduction. Here I covered introduction and objective. Actually, basically there are 2 objectives are there. These are the only 2 basic objectives. So third one is form part of introduction. EPS is useful for computation of market price per share. MPS is equal to EPS into PE ratio. Oh my God, I can't understand anything, sir. What is this PE ratio? Again, this PE ratio will come in your ratio analysis. Once again, for the time being, I will discuss about the PE ratio first. For better understanding, I will discuss about PE ratio, guys. Consider it, all of you. Okay. So what is the meaning of PE ratio? Actually, the formula for PE ratio was MPS divided by EPS. MPS divided by EPS. So practically speaking, let us assume if I take Reliance Industries Limited, the outside market price, just let us assume the outside market price was 3,000 rupees. Sir, earnings price per share, let us assume 30 rupees. Okay, just illusionary figures I am putting. Now the PE ratio is equal to how many times? The PE ratio was 100 times actually. Sir, what it means? What it means? It means in future, investors will expect that how much earnings need to be earned by the Reliance Industries Limited with respective to the market price. For example, in the next year, Reliance Industries Limited market price fetched to 4,000. Let us assume. Then investors would expect that at least 100 times such a earning should be increased, right? Tell me, guys. That is simply, that is 100 times means, sorry, if it is 3000, then the PE ratio should be maintained 100 times means, the PE ratio should maintain 100 times means the earning should be at least 40. The earning should be at least 40. So here PE ratio is useful to estimate the earnings of an enterprise. At least they would expect such much, that much of earning should be need to earn by the Reliance Industries Limited if their shares are in the outside market, if they quoted at 4,000. That means PE ratio is useful in generally for the purpose of estimation of the earnings with respective to market price. One more, in another way also I can tell, in another way also I can tell. Please all of you concentrate. Depending upon the PE ratio, we can estimate the payback period. Payback period means, sir, for example, right now, if I want to invest in a Reliance Industries Limited share, I required 3,000 rupees, right? I required 3,000 rupees. Am I right or wrong, guys? I required 3,000 rupees. Now, within how many years that entire 3,000 will be payback by the company? That is, every year I am getting 30 rupees as an earnings. That is, it should take minimum 100 years to pay back that entire investment. Such payback period will also be decided by the PE ratio. In generally, investors are very much interested to invest in such shares for which payback period is very less. Why? Because if we invest in right now, within 5 years, that entire amount will be payback by the company, then people are very much eagerly waited for that. Tell me, guys. So such analysis will be possible from PE ratio. That and all actually not belongs to EPS. That is not my cup of tea, but out of exaggeration, just I'm telling. Okay, so come back, guys. Now, what they are telling, in estimating the market price per share, EPS plays vital role. If the PE ratio is equal to MPS by EPS, then MPS is equal to, we can easily estimate MPS is equal to PE ratio into EPS. The same formula here I put, MPS is equal to PE ratio into EPS. Hope you get it. So EPS is indirectly is also useful for computation of market price per share. Okay, fine, guys. So ultimately we saw two objectives, one as an introductory part. Objective number one is determination and presentation of EPS in the financial statements, and objective number two, intra-firm and inter-firm comparison is possible due to presentation of the EPS, and as an introductory part which is useful for computation of market price share as well. Okay, so these are the introduction objectives of the EPS. Next, as per the structure of our accounting standard, next we are going to discuss actually definition, after that scope. But here first I discuss the scope, after that I will discuss the definition. That is only for the sometimes I will jumble, but this is the actual structure was given as per the accounting standard. Sometimes I will discuss scope, after that I will discuss the definition. That is according to the benefit we are deriving. Okay, so in this standard, first I made a discussion things related to scope, nothing else. Then after that I will discuss about the definition. No worries. Scope, this standard should be applied by all the entities. The standard is applicable to all entities. However, a small and medium sized company, SMC, in corporate point of view, SMC, non-SMC, he is telling about SMC, and a small and medium sized non-corporate entity. Small and medium sized non-corporate entities means other than level 1 entities, that is level 2, level 3, level 4. With respect to applicability of accounting standard to various entities, may not disclose diluted earnings per share. Simply he is telling in the scope paragraph, the first point what he told, sir, basic EPS is applicable to all entities. Basic EPS is applicable to all entities, all entities. But diluted EPS is only applicable to non-SMC. For SMC it is not applicable, right? For SMC it is not applicable, as well as In case of non-corporate entities, it is only applicable to level 1. So that means level 2, level 3, level 4 not applicable. Level 2, level 3, level 4 not applicable. That is the point indirectly he is conveying. Next, point number 2. In consolidated financial statements. In introduction to advanced accounting, we discussed one of the chapters, consolidated financial statements, right? If holding and subsidiary relationship exist, then the parent company should prepare, along with the standalone financial statement, it will prepare consolidated financial statements group as a single entity. They will treat group as a single entity, then they will prepare a consolidated financial statements by clubbing both holding company financials as well as subsidiary company financials. So in consolidated financial statements, if a company need to prepare a consolidated financial statements, then the information required by this standard should be presented on the basis of consolidated information. Simply, he is telling that in consolidated financial statements, while preparing the consolidated statement of profit and loss account, we should present the basic EPS as well as diluted EPS on the basis of consolidated information, not on the basis of individual entity information. That is, we can easily find it. And one more important thing, just actually I forgot to tell, this is not related to scope paragraph, just as an introduction only I am telling you. Just I'm giving a hint, guys, not I'm discussing the entirely. The hint point is, one second. Yeah. The hint point is here. Sir, you are telling that the standard will discussing about the presentation, right? Presentation means where we present, sir. Where we present. You know, EPS, that is both diluted and basic EPS, where we present, you know, we are going to present it in statement of P&L. In statement of P&L. Where we will present, guys? Statement of profit and loss. In statement of P&L, where we will present, I will discuss in detail in the respective paragraph. No worries. So just for the time being, I'm telling you. So once if it was determined where it should be presented, sir, in the statement of profit and loss account. Okay, come back, guys, all of you. Hope you understand both objective paragraph and scope paragraph. And coming to the definition, actually, I'm going to define the EPS along with measurement. So that's where the next immediate part I'm putting as a measurement. This is actually both measurement plus definition as well. So in this standard definition actually clubbed into the measurement. Okay. No worries. You can treat it as a measurement or the definition, whatever the case may be. What is the meaning? What is the definition of basic earnings per share? Here, in the objective, we saw we have to determine as well as present both basic and diluted EPS, right? Now he is talking about basic earnings per share. What is the meaning of basic earnings per share, which is a ratio? How that ratio is there? Net profit or loss attributable to equity shareholders. Net profit or loss belongs to equity shareholders divided by weighted average number of equity shares outstanding during the period. The same formula I can put into another way. That is in the same way that through shortcuts. Just I'm telling you through shortcuts, guys. Concentrate. Just a moment. So every time my OneNote is hanging, that's why I'm closing and opening. Just give a moment, please. Let us check what is the issue. Yeah, now it's working. Thank God. Oh, concentrate. So the formula for basic EPS, is talking about measurement, right? Measurement. So the formula for basic EPS is, in shortcut, earnings available to equity shareholders. Earnings available to equity shareholders. In shortcut, EAESH divided by VANES, weighted average number of equity shares. The same formula which you write here, just I made it in the shortcut. That is net profit or loss attributable to equity shareholders. I used the word earnings available to equity shareholders divided by weighted average number of equity shares outstanding during the year, which are Vane's weighted average number of equity shares. In shortcut, you can remember like this: EA ESH divided by Vane's, guys. EA ESH divided by Vane's. This is the formula for basic EPS. 1 second. Yeah, right. This is the formula for basic EPS. Now, in the ratio, you are having denominator part, you are having numerator part as well as denominator part, right? So in all the below paragraphs, we are going to discuss about numerator part as well as denominator part. What exactly the meaning of net profit or loss attributable to equity shareholders? So let us discuss about earnings available to equity shareholders or net profit or loss attributable to equity shareholders. One thing, guys, sir, net profit or loss attributable to equity shareholders means obviously which is profit after tax, right? So first, from the profit, you have to pay the related tax to the government. Then profit after tax will be available from the statement of profit and loss account. Out of this profit after tax, first you have to make payment to whom? Preference shareholders are equity shareholders are. That is in the sense of dividend. First you have to make payment to the preference dividend. You already made payment to the interest on debentures, you incurred all the expenditure. After that only you are getting this profit after tax. So from this profit after tax, you will make payment to preference shareholders as preference dividend, as preference dividend. And one more thing, actually, sir, at the time of payment of dividend, is it dividend distribution tax is applicable or not applicable? As per the recent amendments made in the Income Tax Act 1961, I'm talking about the recent amendments, dividend distribution tax as per section 1150 was removed. Actually, earlier there is a dividend distribution tax, and just I'm talking about first the earlier scenario, then I will talk about the current scenario. So this is about earlier scenario. First I will discuss about the earlier scenario. So earlier what happened, the company at the time of making payment, at the time of declaring dividend to the shareholders, company should pay dividend distribution tax under section 1150, that is at the rate of 15%. Then surcharge will be applicable, some computational methodology will be there. So that's why such dividend will be exempted under section 1034 in the hands of the shareholder. These are the earlier scenario. Dividend distribution tax will be paid by the company itself at the time of declaring dividend to the shareholders. That's why such dividend was exempted in the hands of shareholders as per section 1034. But now current scenario, the current scenario was, sir, dividend distribution tax was abolished, removed. Removed means right now government don't want to collect a tax from the company. It will directly charge in the hands of the shareholder itself. That's why 1034 exemption also removed. 1034 exemption also removed. Sir, why I am telling all these points? Earlier, at the time of paying the preference dividend to the preference shareholders, company should also pay dividend distribution tax on preference dividend. Okay. If in the earlier scenario, DDT is also an outflow, that's why that part is also going to reduce for the purpose of knowing earnings available to equity shareholders. For the purpose of knowing earnings available to equity shareholders. So that's why I will simply put it as, if DDT applicable, then you may reduce. In the examination problem, if it's clearly specified that dividend distribution tax given something, then you can reduce. Otherwise, you can simply ignore. Understand my point here? Now come back here, all of you. So earnings attributable to equity shareholders is nothing but profit after tax, PAT, less preference dividend, less dividend distribution tax on preference dividend if applicable. That's why I used the word if applicable, but right now it is not applicable, but in the problem it is mentioned, you can specify. Then you will get earnings available to equity shareholders or profits attributable to equity shareholders. Okay, fine. Sir, here you can observe one more thing. Net profit includes loss as well. Net profit includes loss as well. That means only if there are a positive profits are available, then only we can distribute, then only we can calculate the EPS, not like that. Which is not related to payment, which is related to the quantum of earnings. The earnings may be positive earnings or it may be negative earnings. So that's why the EPS can also be reported in the negative manner as well. That means if the entity is suffering with losses, then earnings available to equity shareholders are nothing but losses available to equity shareholders. It is the quantum of earnings we are reporting in the statement of profit and loss account only. That's why the EPS may also be negative as well. Please bear that point in your mind, guys. Now, come here, all of you. Hope you can understand in the better way right now what exactly the meaning of earnings available to equity shareholders or net profit or loss attributable to equity shareholders. Okay. Then some key important points now I'm going to discuss, guys. All of you, please concentrate. What are such key important points? First and foremost thing, sir, in calculating earnings available to equity shareholders, in calculation of earnings available to equity shareholders, I will consider every type of expense. I will consider every type of income. Sir, every type of expense and every type of income means, can I consider abnormal profits? Yes. Sir, can I consider abnormal losses? Yes. Every type of, every expenditure and every income I will consider, which include profit after tax means every income, every expenditure was already considered. That is the point number one, each and everything. Number two, point number one, what I discussed in the important point. So every income and expense, including abnormal, items, I will consider. Point number two, just a moment. Point number two is, sir, as per AS5, AS5, what is the title of AS5? In introduction, we discussed net profit or loss for the period items, prior period items, and changes in accounting policies. I discussed at that point of time, sir, if any loss occurred due to pandemic, loss occurred due to earthquakes, we should separately disclose it in the name so-called as extraordinary items. Tell me, guys, are you recollecting the things which I discussed in the intro part? Extraordinary items should be separately disclosed in the statement of P&L. AS5 was introduced only for that purpose. I told at the point of time. Sir, why you are discussing all such things right now, sir? The reason is extraordinary items, if anything are there. For example, current year earthquake loss is there. Yes, I debited to the profit and loss account. Such extraordinary items should also be considered at the time of calculation of earnings available to equity shareholders. Extraordinary items, extraordinary items should also be considered for the purpose of calculation of earnings available to equity shareholders. One more interesting fact here I'm going to discuss, guys. Please all of you observe, which is very much interesting and confusing as well. Concentrate. What is that, sir? Sir, you know about cumulative preference shares and non-cumulative preference shares, right? Cumulative as well as non-cumulative preference shares. This is non-cumulative. So this side I will put cumulative preference shares. So cumulative preference shares, so non-cumulative preference shares and cumulative preference shares. So what is the special point here, sir? Please observe, then tell me whether it is special or not. Sir, in generally, what is the meaning of cumulative preference shares as well as non-cumulative preference shares? Can you please tell me, all of you? Sir, non-cumulative preference shares means if in a particular period, company is not having a sufficient profits or company is suffering from losses, then preference shareholders will not get any single rupee as a dividend. No need to pay. There is no obligation arised in the company hands to pay the dividend to the non-cumulative preference shareholders. Simply, preference shareholders will lose their right of getting the dividend. But coming to cumulative preference shares, in the current year, if company is suffering from losses, then company no need to pay in the current year. Then the current year preference dividend will be added to the next year preference dividend. For suppose in the next year, company is end up with profits, then it is the obligation of the company to repay the preference dividend along with the previous year preference dividend. Am I right or wrong? That means the privilege will be there to the cumulative preference shareholders. The preference dividend will be accumulative by period. Am I right? That point, you know, all of you, right? Now coming to here, sir, coming to non-cumulative preference shares point of view, if in the current year company declare the dividend, company declare the preference dividend, then only we can reduce. Company declare, if the company declare preference dividend, then we may reduce for the purpose of calculation of earnings available to equity shareholders. But coming to cumulative preference shares, sir, whether you declare it or not, they are accumulating, right? They are accumulating. If you are not paying right now, then you have to pay in the next year as well. That's why, irrespective of the declaration, irrespective of the declaration, you have to reduce preference dividend for the purpose of calculation of earnings available to equity shareholders. That is the highlight point, guys. Sir, in case of non-cumulative preference shares, for the purpose of calculation of earnings available to equity shareholders, only if you declare, then only you can reduce the preference dividend for calculation of EISH. But in case of cumulative preference shares, whether you declare it or not, you have to reduce. You have to reduce. You have to reduce. If only declare, then only you should reduce the preference dividend. Irrespective of the declaration, you can reduce. Then one more doubt I have. Consider it, all of you. What is the doubt? You know, the doubt is, sir, let us assume this is the year 2020-21. Sir, in 2021, consider it, all of you. In 2021, company is suffering losses. Company is suffering losses. But still, if the preference shares are the cumulative preference shares, I have to reduce. I have to reduce preference dividend in calculation of EPS, right? In calculation of earnings available to equity shareholders as per the provision. Now, coming to the year 21-22. So 21-22, company is ending with profits. Company is ending with profits. Now in 21-22, company will pay. I'm talking about the payment of the dividend. Company will pay dividend related to 2021 plus dividend related to 21-22 as well. But for the purpose of calculation of EPS, you should reduce preference dividend only related to 21-22. Even though the payment was happened for both the years 2021 and 21-22, that is only related to the payment. But for the purpose of calculation of EPS, you should reduce only 21-22 dividend. You know why? You already reduced 2021 dividend in the year 2021 calculation. Tell me, guys, in the year calculation of 2021, even though if you are not paid any single rupee as dividend, you already reduced that year preference dividend. So that's why in the year 21-22, even though if you made a payment of the 2 years, collectively, you should only reduce that particular year dividend only. Sir, what is the moral of the story, sir? There is no relation in between the reduction of the preference dividend and payment of the preference dividend with respect to cumulative preference shares. The reduction of the preference dividend should be happened each and every year irrespective of the declaration. That point I mentioned here. The same thing we can read from important points on earnings available to equity shareholders. All of you please observe. Sir, here I'm discussing the entire standard in advanced manner. I'm not pulling the basic provisions. So just I don't want to chit chat lightly with all the provisions, and simply I don't want to complete it. I will take each and every provision elaboratively and will discuss. Okay, now consider it, all of you. All items of income and expense which are recognized in a period, including tax expense and extraordinary items, are included in the determination of the net profit or loss for the period. That's why I used the term profit after tax. Here I used the term profit after tax, as well as I should also consider extraordinary items as well. The next item, the amount of preference dividends and any attributable tax, which is nothing but dividend distribution tax, if at all there, for the period is deducted from the net profit for the period in order to calculate the net profit or loss for the period attributable to equity shareholders. That point, we already discussed. Coming to point number 3, the amount of preference dividends for the period that is deducted from the net profit for the period is how much amount of the preference dividend we have to deduct. He is talking related to non-cumulative preference shares. We should only reduce if they declare the amount of any preference dividends on non-cumulative preference shares provided means if they declared, then only we have to reduce the full amount of the required preference dividend for cumulative preference shares for the period, whether or not the dividends have been provided, whether dividend declared or not, entire amount of the cumulative preference shares you have to reduce. The amount of preference dividend for the period does not include the amount of any preference dividends for cumulative preference shares paid or declared during the current period in respect of the previous periods. So what is this last paragraph, sir? We discussed now, sir, at the time of making payment of, one second. We discussed in our OneNote that at the time of making payment in the current year 21-22, even though we paid the dividend related to the previous year, we should only deduct the current year dividend only. We will not reduce the previous year dividend in respect of cumulative preference shares. The same fact here is discussing. I will repeat one more time. I'm reading one more time. The amount of preference dividend for cumulative preference shares for the period, for the current period, does not include the amount of any preference dividends for cumulative preference shares paid or declared during the current period in respect of the previous periods. Related to the previous periods, if you paid in the current year, you should not reduce. That point he is telling. Hope you understand. So the moral of the story is simply the conclusion part we made here. What is the conclusion part we made? Sir, in case of non-cumulative preference shares, if you declare, then only you can reduce. But in case of cumulative preference shares, irrespective of the declaration, in that particular current year, you can reduce the preference dividend. But there is no relationship in between the payment of the preference dividend and reduction of the preference dividend while calculation of EPS. So that is the reason, even though two cumulative periods, even though if you are paying the dividend to the preference shareholders, you should reduce only that respective year dividend for the purpose of computation of EPS. That is the special point we learned from the important points. And the last one, let us check here. If an enterprise has more than one class of equity shares, net profit or loss for the period is apportioned over the different classes of shares in accordance with their dividend rights. For example, in generally, company is having only one class of equity shares. Then there is no much difference occurred. All the equity shareholders having a equal dividend right. All the equity shareholders have a equal voting right in the profits, right? But more than one class of equity share is available. I already discussed different classes of shares. That is, one chapter is there. One chapter also available, that is in the buyback of equity shares. After buyback of equity shares, we discussed one more chapter, equity shares with differential rights. As per Companies Act 2013, it is possible to issue different class of shares. In the intro part, I already discussed. Then what I have to do, sir? Then the entire profit should be first issued attributable between Class A shareholders, Class B shareholders. Then for Class A, you have to separately calculate EPS. Then for Class B, you have to separately calculate EPS. Just it is a normal point he is telling. Now, hope you understand exactly things related to earnings available to equity shareholders or net profit or loss attributable to equity shareholders. Okay. Then coming here, weighted average number of equity shares outstanding during the period. All of you, please observe what is the meaning of WANS, weighted average number of equity shares. So out of the entire paragraphs, out of the all paragraphs, only 2 paragraphs are discussing about the net profit or loss attributable to equity shareholders. Remaining all paragraphs only discussed about the denominator factor, guys. That is related to WANS, weighted average number of equity shares. Now all of you concentrate. First, let me check with my OneNote. Then we will have a in detail discussion with my material, guys. Okay. Now we are discussing about the WANS, right? Right. WANS. So the full form of the WANS was weighted average number of equity shares. Sir, why he used weighted average number of equity shares? Why he not used the word equity shares? I will tell you the reason. Let us assume in the current year beginning, I'll take the financial year as 2020-21. Let us assume. So as on 1/4/2020, so number of equity shares are 1 lakh. Let us assume the number of equity shares are 1 lakh. Okay. Then after 6 months, that is as on 1/10/2020, let us assume 50,000 equity shares were issued. 50,000 equity shares were issued. Now the status was as on 31st March 2020. Sorry, 31st March 2021. The status is 1,50,000 equity shares are outstanding, right? Now, whether we can take it as for the purpose of calculation of EPS as a number of equity shares, can I consider 1 lakh, 1,50,000 or on an average? So I cannot tell number of equity shares outstanding as 1 lakh as well as 1,50,000. Both are wrong. Why? Because on average, how many number of equity shares outstanding I have to calculate, which is nothing but weighted average. That weight is period weight. That weight is period weight. Sir, period weight means these 1 lakh equity shares are outstanding for entire 12 months, right? That's why these first 1 lakh equity shares outstanding out of 12 months, these are outstanding for entire 12 months. Plus these 50,000 equity shares are outstanding only for 6 months out of 12 months. So that's why I can put 50,000 into 6/12. Then can you please tell me the weighted average number of equity shares here? 1,25,000. 1,25,000. Here 50,000 into 6/12 means 25,000 plus 1 lakh, which is equal to 1,25,000. It is not 1 lakh. It is not 1,50,000. It is 1,25,000, guys. And one more point here, just I want to tell you. Here I only established a further issue of shares. Let us assume in the year itself, certain buyback of equity shares are there. You know, buyback of equity shares means company will bought back equity shares from the equity shareholders, then such shares will be cancelled. That means due to buyback, the number of equity shares will be reduced. Let us assume I added one more case here as on 1st January 2021. 1st January 2021. Let us assume 40,000 equity shares were bought back. This is an additional case, guys. I'm adding here. This is additional case. Then how the weighted average number of equity shares calculation will change? Let us check here. All of you concentrate. First, before that, just give a moment. Before this, I'm rubbing 1 second. So before telling this, I will tell you the same calculation in another method as well. We will say another method, then I will add that concept as well. Now the same calculation of weighted average number of equity shares we can made in another method. This is method number 1. Actually, I'm putting this is as method number 1. This is M1. Okay. Next, let us put this is M2, method number 2. So this is method number 2. Sir, what is the method number 2? Let us check, guys, all of you. In method number 2, how we are going to calculate from period to period, we will check 1/4/2022, 1/10/2020. How many number of shares are there? 1 lakh. How many number of shares are there? 1 lakh. Into how many number of months? 6/12. Only 6 months, right? Period to period, we will check 6/12. Plus, now 1 lakh plus 50,000, it will become as a 1,50,000. Now, as on 1/10/2020, the outstanding number of shares were 1,50,000. These 1,50,000 shares are outstanding for throughout 6 months, right? Another 6 months. That is into 6/12. Now the total how much? 1 lakh into 6/12, 50,000 plus 1,50,000 into 6/12, 75,000. So total is also equals to 1,25,000, as like in method number 1. Method number 1, we are getting the answer 1,25,000. In method number 2 also, we are getting the answer 1,25,000. So that's why whether you can follow method number 1 or method number 2, I don't mind. Just you are calculating the weighted average number of equity shares. That's it. Now I will add another thing, another scenario here. What is that scenario? As on 1st John 2021, you made a bought back. This is another scenario. Buyback of the shares happened. Now, how the calculation of weighted average number of equity shares will happen? We'll check here. Okay, how it will change? We'll check here. All of you concentrate. Let us follow method number 2 for convenience. I will follow method number 2. In opening, 1 lakh equity shares are there, right? I'll use the same color. Then you can find it in the same case as well. Okay. So 1 lakh in the opening, 1/4/2022, 1/10/2020, 6 months. So outstanding 6 months divided by 12. Now, as on 1/10/2020, it will become 1,50,000, right? 1,50,000. These 1,50,000 equity shares are outstanding up to 1/1/2021 only. That means only 3 months only outstanding period is there out of 12 months. 3 months only outstanding period is there. Then 1,50,000 minus 40,000. Bought back means minus 40,000. Then it will become 1,10,000. That 1,10,000. 1,10,000 for how many number of years? That is for 3 years. Sorry, how many number of months? 3 months. 3/12. Then the outstanding number of shares were not 1,50,000, guys. Then the outstanding number of shares were not 1,50,000. At that point of time, the outstanding number of shares were 1,10,000. In the second scenario, I'm talking. In the first scenario, it is 1,50,000 only. Now, please all of you calculate the weighted average number of equity shares here. This is 1 lakh into 6/12, 50,000 plus here it is 37,500. Here it is 27,500. So the total 50,000 plus 37,500 plus 27,500. That is 1,15,000 equal to 1,15,000. So now the weighted average number of equity shares were not 1,25,000. The weighted average number of equity shares will be changed as 1,15,000 once I added the buyback concept. Now, hope you understand in generally how the weighted average number of equity shares concept will work out, which are not opening outstanding, which are not closing outstanding, which is average. That average is a weighted average. That average is a weighted average. Here the weight is a period value weight. The weight is a period value weight. This all is known as period value weights. Okay. So apart from this, I will create one more scenario. Please allow me concentrate. I will create one more scenario to the same thing. What is that scenario, sir? The scenario was, now here the face value let us assume 10 rupees. For all the shares face value 10 rupees. The paid up value, it is 10 rupees here, fully paid up. This is 5 rupees, partly paid up. I added another scenario. I already told you I am adding another scenario. Just a second, change the color for your understanding. One second. This is the new scenario, guys. Don't be confused. I don't want to take multiple illustrations. In the same illustration, I'm adding one by one issue. This is the paid up value, 10 rupees fully paid up. Here 50,000, 5 rupees partly paid up. This was also fully paid up. This is only outstanding balance, no worries. Now, how the calculation of variance will change? How the calculation of variance will change? Now, all of you please concentrate. Sir, in the opening, how many number of equity shares are there? In opening, how many number of equity shares are there? I'll change another color. I'll put this color, just wait. So this is actually case number 1. Let me write. This is case number 1. This is case number 2. Now I'm discussing about case number 3. Now I'm discussing case number 3. In case number 3, in opening, 1 lakh equity shares are there, not an issue. In opening, how many number of equity shares are there? 1 lakh. Now, one thing you have to check whether all the shares are fully paid up or not. All the shares are fully paid up. You have to consider, along with period value weight, you have to consider the paid up value weight as well. Why? Because in this scenario, maybe fully paid up shares, but in another scenario, which are partly paid up. Sir, is it fully paid up share and partly paid up share? They will get the same level of contribution in the earnings? No. Sir, dividend will also be paid based upon the paid up value only. For fully paid up shares, we will pay dividend as full. But for partly paid up shares, we will only pay dividend part of the amount paid by the other party only. So in the same way, in the earnings contribution also for that particular shareholder, earnings will be available based upon the paid up value only. That's why along with the period value weight, we should also consider paid up value weight. Here the paid up value was out of 10 rupees, 10 rupees was paid up. Sir, how many number of months outstanding? As you know, 6 months. Now the period value weight was 6 by 12 plus. Now for 1 lakh, if you add 50,000, it will become 1,50,000. It will become 1,50,000. Now concentrate. In this 1,50,000, 1 lakh were fully paid up, 50,000 were partly paid up. Am I right? So that's why I'll write separately only. That is 1 lakh were fully paid up. For remaining, how many number of months outstanding? From 1/10/2020 to 1/1/2021 means 3 months outstanding. 3 by 12. Still I am here only. For the remaining 50,000, only partly paid up, you know, that is 5 by 10. These are also outstanding for 3 months. This is the second one. Plus, now consider all of you. Sir, if you once bought back this 40,000, if you bought back this 40,000, let us assume these 40,000 equity shares are bought back from here. Let us assume. Then the total 1,50,000 will become 1,10,000. Out of such 1,10,000, 50,000 plus 60,000. Out of this 1,40,000 was bought back means remaining 60,000 equity shares are there na. 60,000 plus 50,000 will be there. That means 60,000 equity shares are fully paid up. These were outstanding for remaining 3 months. And the remaining 50,000 equity shares are partly paid up. These were outstanding for the remaining 3 months. Now, the only simple issue just I added to the period value weight, paid up value weight as well. So just I don't want to make it calculation. Just you will calculate from your end. You'll put the final answer. Okay, sir, what is the conclusion just you want to draw? Can you please let me know, sir? The conclusion drawn from my side is weighted average number of equity shares is equal to equity shares outstanding. Sir, whether you can follow method number 1 or method number 2, I don't mind. There are two methods are there, which is simple to you. You can follow according to your methodology, not an issue. So weighted average number of equity shares is equal to equity shares outstanding into period value weight into paid up value weight. Period value weight into paid up value weight. This is the final conclusion we can draw from all the illustrations. Sir, here period value weight means, what is the meaning of period value weight? That is outstanding number of months divided by 12 months. What is the meaning of paid up value weight? Paid up value divided by face value. Am I right, guys? Out of the face value, how much you paid? This is the final formula for calculation of weighted average number of equity shares. Okay. Now let us check this entire content through our material as well, guys. So if you check Vane's here, so the formula which was clearly given, Vane's is equal to number of equity shares outstanding into period value weight into paid up value weight. So number of equity shares outstanding means, you know, here the outstanding, how we are considering, the clear cut illustration was explained by me. So in method number 1, you can consider the outstanding like this, as well as in method number 2 also you can considering the outstanding in another way as well. But here the catchy point is, you should multiply with period value weight as well as paid up value weight. Period value weight means number of months outstanding divided by 12 months. Paid up value weight means paid up value divided by face value. Okay, so the same formula given, period value weight is equal to number of months outstanding during the year divided by 12 months. So before seeing the paid up value weight formula, I'll give one more scenario for better understanding of the paid up value weight. So just here we write paid up value weight is equal to paid up value divided by face value, right? So I'll give another scenario, another case for better understanding. Consider it. What I'm telling, paid up value weight. Consider it, guys. The example is, the face value of the share was, let us assume 100 rupees. Face value is 100 rupees. Issue price, the share is issued to the public at 130. 130 means 100 rupees face value plus 30 rupees premium. 30 rupees is premium. Now, in the current year, we collected from the shareholder, that is amount collected from shareholder is, let us assume 70 rupees. Now calculate the paid up value weight. Now the question is, calculate the paid up value weight. You should calculate paid up value weight. How we are going to calculate the paid up value weight? Is it paid up value 70 divided by face value 100? It's wrong, guys. So most of the people is thinking that 70 by 100, but it's wrong. Intentionally only given by me. Sir, amount collected from shareholder was 70, right? But out of this 70, 30 rupees premium is included. 30 rupees premium is included. Towards the face value, how much they collected? Towards the face value, how much they collected? Out of 100 rupees, they collected, if they collected 30 towards the premium, then towards the face value, he collected 40 only. Towards the face value, he collected 40 only. So that's why paid up value towards the face value, how much? Out of this 100, he collected how much? 40. So, you know, premium should be always collected along with the allotment in generally. That's why they already collected 70 means premium already collected. So that's why paid up value formula is slightly redefined by me. Paid up value weight will be slightly redefined by me. Paid up value towards face value. towards face value divided by face value. That is 40 divided by 100 is the paid up value weight. Now you can check the formula in my material. Clearly I given paid up value weight is equal to paid up value towards face value divided by face value. Always you should use the same formula. Paid up value by face value only. That paid up value out of face value how much divided by face value is the formula. Okay, number of equity shares outstanding during the period is the number of shares outstanding at the beginning of the period adjusted by the number of equity shares bought back or issued further issued during the period. That means if any further shares are issued, you should add. If any number of shares are bought back, you should reduce accordingly. The same thing we already considered in our all illustrations and cases as well. Okay, this is the in detail discussion. We made things related to both earnings available to equity shareholders and weighted average number of equity shares. Still weighted average number of equity shares discussion not yet over. Still lot more to discuss, guys. So where we started here. The objective of introduction of AS20 is determination and presentation of EPS in the statement of P&L, and both presentation of EPS is possible to intra-firm as well as inter-firm comparison, which is nothing but performance comparison. EPS ratio is also useful to calculate market price per share. Okay, then we check the scope paragraph. Sir, all presentation of basic EPS is applicable to all entities, but presentation of diluted EPS is only applicable to level 1 as well as non-SMC. That's why SMC and level 2, level 3, level 4 entities are no need to disclose diluted EPS. And one more thing, at the time of presentation of consolidated financial statements, we should consider the EPS based on the consolidated financial statements information only. Then the meaning of EPS or the formula for EPS, basic EPS equal to profits attributable to equity shareholders or earnings available to equity shareholders divided by weighted average number of equity shares, out of which how we will compute the numerator part. Earnings available to equity shareholders is equal to profit after tax minus preference dividend minus dividend distribution tax on preference dividend if applicable. But right now DDT is not applicable as per the current Income Tax Act 1961 amended provisions. Then we will get earnings available to equity shareholders. Some more important points we discussed about the EA/ESH. Every income and expenditure including abnormal items should be considered. Extraordinary items as per AS5 should also be considered for the purpose of calculation of EPS. In case of non-cumulative preference shares, if at all dividend was declared, then only we should reduce. But in case of cumulative preference shares, irrespective of the declaration of the dividend, whether dividend declared or not, in that particular year dividend we can reduce. One more important point you have to remember: in case the previous year if you not paid the cumulative preference dividend, in the current year you may pay along with the current year preference dividend and along current year preference dividend as well as previous year preference dividend. But for the computation of earnings price per share, you should only reduce current year dividend only. You should not reduce the previous year dividend related things. That point also we mentioned. Next, things related to weights we discussed. Weighted average number of equity shares is equal to equity shares outstanding into period value weight into paid up value weight. Here period value weight is nothing but outstanding months divided by 12 months. Paid up value weight is equal to paid up value towards face value divided by face value. Any how the equity shares outstanding will be calculated: opening equity shares outstanding should be adjusted with further number of shares issued. Any shares bought back is there, such things you have to adjust at the time of calculation of weighted average number of equity shares. Okay, so this is the discussion till now we made. So further discussion, let us check with our material, guys. All of you please concentrate. Now effective date concept. Now the concept with effective date. Sir, what is this effective date? It means the date from which shares are included in the weighted average number of shares. So we already know now from which date it is outstanding. We can consider from that date these are exist in our entity, then we may include from that date. But what is the date? What is that effective date? From which date we can consider such shares are existing in my entity? For that purpose, they introduced the concept of effective date. Simply effective date means the date from which we can assume such shares are existing in my entity for the purpose of consideration of weighted average number of equity shares. That is generally from the date the consideration is receivable, not at the time of consideration received. That means, for example, if we made a call, what is the entry we are passing? Share call to share capital. Even though as on that specific date, we may not receive the amount from the shareholder, but still to the extent of the paid up value share is in existence. That's why the effective date of the share is not as on date cash received, as on date receivable. It may not be cash, it may be anything. That is simply he's telling that consideration is receivable. Not only this point, so many scenarios below he will give. Each and every scenario we will find that what is the effective date. Let us check almost here 8 scenarios were given. Let us check in each and every scenario what will be the effective date. Equity shares are issued in exchange for cash are included when cash is receivable. I issued the equity shares for cash. Then when cash is receivable, not when cash is received. Okay. Equity shares issued as a result of conversion of a debt instrument, simply convertible debentures. In case of conversion of convertible debentures into equity shares, what will be the effective date? The effective date is equity shares are issued as on the date of conversion. The effective date is date of conversion. Here is date of conversion. Here is cash receivable. Equity shares are issued in lieu of interest or principal on other financial instruments are included as of the date interest ceases to accrue. For example, I took a bank loan. I took a loan from the finance company. Then for the purpose of repayment of either interest or principal, if I issued the equity shares, then what will be the effective date of such issue of equity shares? The date on which interest ceases to accrue. The effective date on which from which on that loan interest will not occur. Why? You already paid in the form of equity shares now. Sir, if the interest was not occurred means you already issued the consideration. That is in the other angle he is telling the date from which interest is ceases to accrue. Interest will not occur from the date. That particular date you can consider it as a issue of equity shares. Equity shares are issued in exchange for the settlement of a liability of the enterprise are included as on the date of settlement becomes effective. Date of settlement. For example, you purchased certain goods from the other party. Rather than payment made in the form of cash, if you issued the equity shares, what is the effective date of the issue of equity shares? That is simply date of settlement becomes effective. Okay, next case, equity shares are issued as consideration for the acquisition of an asset. Here, acquisition of goods, here acquisition of an asset other than cash are included as on the date on which acquisition is recognized. As on which date you are recognized such asset into your books of accounts, such date you can consider as a issue of equity shares. Equity shares issued for rendering of services to the enterprise. For example, chartered accountant provided services to the organization. Okay, one architect provided services to the organization. Then rather than payment in the sense of cash, just you are issuing the equity shares. Then the effective date is date on which services rendered. Date on which services rendered. That is the effective date. Equity shares issued as part of the consideration in an amalgamation in the nature of purchase are included in the weighted average number of shares on the date of acquisition. If it is amalgamation in the nature of merger, then you should include it in the calculation of weighted average number of shares from the beginning of the reporting period. You don't know these 2 points, guys. You don't know these 2 points. Except these, you know everything. I'll put in very simplest form. I will put in very simplest form. Please allow me concentrate for better understanding as well as remembering. So, which is the concept of effective date? We are dealing the concept of effective date. So, which is the concept of effective date? Sir, if shares are issued for cash, let us assume if shares are issued for cash, then the effective date will be cash receivable. Cash receivable. Sir, in case of convertible debentures are converted into equity shares, the effective date is date of conversion. Date of conversion. In case of equity shares are issued for repayment to loan. Repayment to loans. Then the effective date will be date on which interest ceases to accrue. Date on which interest ceases to accrue. Date on which interest stopped. Interest accrual stopped. Repayment to creditors, you can take as on date of settlement. Date of settlement. At the time of purchase of asset, if you are issue equity shares, that is date as on which asset recognized into books of accounts. Asset recognized into books of accounts. Am I right? Next, you are issuing equity shares in consideration to services. In consideration to services. Then date on which services rendered. Date on which services rendered. And the last one, we learned the last one as well. What is that last one we learned? So which is amalgamation. Actually, we learned amalgamation, right? 1 second. So we learned amalgamation. What we learned in amalgamation? So as per AS 14, you don't know. In the respective chapter, we will discuss in detailly. So at that point of time, you know everything. So amalgamation is broadly categorized into two types actually. Amalgamation is broadly categorized into two types. That is amalgamation in the nature of purchase, amalgamation in the nature of merger. Amalgamation in the nature of purchase, amalgamation in the nature of merger. That is amalgamation in the nature of purchase. And another one is amalgamation in the nature of merger. Actually, two types of amalgamation is there. Sir, what is amalgamation in the nature of purchase? What is amalgamation in the nature of merger? This is not a right time, and it is very huge and big topics we are going to discuss in the respective chapter. Intentionally and not it discussed in the introduction as well. So amalgamation in the nature of purchase, the effective date will be, for the time being, you can remember, which is as on date of acquisition. As on date of acquisition. The reasons I can tell you after amalgamation chapter. Amalgamation in the nature of merger as on first date of current reporting period. First date of current reporting period. So first date of current reporting period means, for example, if you are in the financial year 2021, then 1st April 2020, from the date on which equity shares are coming into effective. We can assume like that. Now, if you check the same way, if your shares are issued for cash, cash receivable, convertible debentures, date of conversion, repayment to loan, interest ceases to accrue, then in settlement to liability, date of settlement, at the time of acquisition of asset, date of acquisition, at the time of rendering the services as on date on which services rendered, amalgamation in the nature of purchase, date of acquisition, amalgamation in the nature of merger from the beginning of the reporting period. From the beginning of the reporting period, that is first date of the current reporting period. Okay, you can simply put beginning as well, beginning of current reporting period. So this diagrammatic representation will give better clarity, guys. Hope you understand the concept of effective date as well. So still a lot more to discuss, things related to weighted average number of equity shares only. These are the basic concepts. These are the base for the basic EPS. In the next video lecture, we will discuss some other contents, how the EPS will be impacted with bonus shares. If in case of right shares are issued, how to calculate the EPS, all such issues we will discuss. But before closure of the lecture, But before closure of the lecture, let us resolve one or two small basic problems, guys. Just now you learned the basic content, right? So based on this, let us complete the basic problems. All of you, please follow along with me. There is a clear-cut printed solution also with me, but till now I didn't upload it in the store. In the meanwhile, so it will take some time, within 5 to 7 days. Nearby Sankranti time, we will upload each and everything. Some more solutions are in pipeline actually. So once if it will completed, I'll upload the entire content at a glance, guys. So please bear me up to that time. So coming to problem number 1, calculate VANs, the required weighted average number of equity shares. As on 1st January, opening balance are given 1800 shares purchased, which are nothing but opening. You can take it as a calendar year, guys. Based on the information, you can tell it is a calendar year. How, sir? He is talking about the beginning. He is giving 1st January. So that's why the year is a calendar year. Fine. On 31st May, issue of shares, further issue of shares happened 600, then balance will become 2400. Then as on 1st November, buyback of the shares happened, which were 300, then balance will become 2100. Then you have to calculate the weighted average number of equity shares. So let us complete the solution through my OneNote quickly. Problem number 1 answer. So only basic 1 or 2 problems we will check right now, or remaining after completion of the entire content only we can discuss. So calculation of weighted average number of equity shares. What is the formula? Outstanding shares. In simple terms, I'm writing outstanding shares into period value weight. Period weight into paid up value weight. Period weight into paid up weight. Okay. Now, here in the opening, how many number of shares they are given? 1800 shares. Opening 1800. Sir, nothing was given means all the shares are fully paid up. If nothing was given means related to paid up value, all the shares are fully paid up. That's why you can ignore the paid up value weight factor. Simply you can concentrate on the period value weight. From 1st January to 31st May, all these 1800 shares are outstanding. That's for 5 months outstanding into 5 by 12. Then 1800 will become 2400, right? Then 2400 shares are outstanding for how many number of months? 31st May to 1st November. That is June, July, August, September, October. That is 5 months outstanding. Am I right? So 2400 into again 5 by 12 plus. Then as on 1st November, buyback happened to the extent of 300 shares. Then 2400 will become 2100. Then from 1st November to 31st December, this is calendar year, up to 31st December, 2 months. So 2100 shares into 2 by 12, guys. Now please all of you calculate from your end. What are the veins here? 1800 into 5 by 12, which is 750. Okay. 2400 into 5 by 12, which is 1000. So total here 1750. 1750 here 350. So total 2100 shares. Total 2100 shares. So you can check the arithmetical accuracy with the printed solution 2100 shares, which is in both the methods. Just I resolved in only one method. Here just they given in the both the methods. I already in the illustrations, in examples, I already mentioned both the methods. Just here I completed in my OneNote in only one method, more than enough. So now let us focus on problem number 2 as well. We'll try to complete problem number 2 also right now itself. Yeah, consider it, guys. Problem number 2. Calculate again weighted average number of equity shares. As on 1st January, balance at the beginning of the year, 1800 shares were given. Face value 10 rupees, paid up value 10 rupees, fully paid up. As on 31st October, issue of shares 600, face value 10 rupees, paid up value 5 rupees, partly paid up. So which is fully paid up, which is partly paid up. So calculate the weighted average number of shares. You have to calculate wins. So now concentrate. So which is problem number 2 answer. So calculation of wins. So if you check here, formula was same, outstanding number of shares into period value weight into paid up value weight. So opening 1800 shares, the opening shares were 1800. First, you can consider the paid up value weight for better thing into 10 by 10 fully paid up. Period value weight up to 31st October. How many number of months are there? 10 months into 10 by 12 plus. Then further number of shares issued 600. Then it will become 2400 shares. Am I right, guys? But out of this 2400 shares, 1800 are fully paid up, 600 are partly paid up. That's why you can write separately, not an issue. How you will write? 1800 shares are fully paid up for remaining 2 months plus, and the 600 shares are partly paid up the remaining 2 months. Okay. Now, can you please tell me how much is the answer? Here into 10 by 12. Here it is 1500. Here 300 plus oh my god, how much it is? It is 1 by 2, 2 by 24, 1 by 12, 600 divided by 12, 50. This is 50, this is 300, total 350. Here it is 1500. Total I got 1850 shares. Sir, you can complete the same problem in another method as well. I don't mind. I already told you whichever is feasible, whichever is easy. If you are feeling comfortable, you can follow that method. Let us check the final answer as well. How many number of shares are there? They are getting 1850 shares, guys. That is 18. Here they are followed simply another method. That is 1800 entire 12 months outstanding, remaining 300 shares only outstanding for 2 months. Okay. So that is, we are also getting the same answer, right? 1850. They are also getting the same answer, right? Which is 1850, guys. Sir, how they will become directly 300, sir? Ante, that is 600 into period paid up value weight 5 by 10. Then it will become, the factor will become 300. They are directly mentioning into 2 by 12. Okay. So assuming that partly paid up shares are entitled to participate in the dividend to the extent of amount paid. It is not an assumption. We can conclude. Why? Because as per Companies Act 2013, we can pay the dividend only based on the paid up value of the share. It is the provision in the articles of association commonly. Okay. Below, one note is also provided where an enterprise has equity shares of different nominal values but with the same dividend rights. The number of equity shares is calculated by converting all such equity shares into equivalent number of shares of the same nominal value. Actually, for this problem, this note is not relevant. This is actually no need to put up this note. He is providing some additional guidance. What he is providing, just I'm creating one illustration for that note. Concentrate. What he is telling, this is not related to problem number 2, guys. Again, I'm mentioning. Just illustration related to note in the this just I'm mentioning the illustration related to note in printed solution. So just I'm writing below the same problem for better understanding. So what is that illustration? Just a small illustration I'm developing. So right, what is that illustration? For example, 1000 shares are there. Face value is 10 rupees. Paid up value is 10 rupees. 500 shares are there. Face value is 10 rupees. Paid up value is 5 rupees. 2,000 shares are there. Face value is 5 rupees. Paid up value is 5 rupees. Then how to calculate the weighted average number of equity shares is the matter of discussion here. Then how to calculate the weighted average number of equity shares is the matter of discussion. Now you can apply the same simple. Here I am not mentioning the period value weight. Let us assume all are at opening. I don't want to take a period value weight. Then how you will take 1,000 shares into 10 by 10, right? Plus 500 shares into 5 by 10 plus 2,000 shares into 5 by 5. So on behalf of writing like this, these 2,000 shares you can convert into a equivalent number of units as well. Equivalent number of units means here face value is 10 rupees, right? If I convert this 5 rupees into 10 rupees face value, then these 2,000 shares will become 1,000 shares. Then at that point of time, you can write on behalf of 2,000, you can write 1,000 into 10 by 10. That point indirectly he is conveying to you. No need to no need to made equivalent, but indirectly he is conveying that where an enterprise has equity shares of different face values but with the same dividend rights, the number of equity shares is calculated by converting all such equity shares into equivalent number of shares of the same face value. You can convert for the purpose of calculation of weighted average number of equity shares into equivalent number of units, then you can apply the same face value. But no need of that. So just I mentioned for better understanding of the note. That's it, guys. One more thing. Let us resolve problem number 3 as well. Right now, no, problem number 3 is based on bonus concept. Okay, just leave it. Not an issue. Just leave it. Up to problem number 2, we completed in the same video lecture. So before watching the next video lecture, please all of you summarize the things till now what we have discussed in this accounting standard. Until bye, have a nice day, guys.